Godrej Properties bucks the trend. The FY24 bookings are up 61% above guidance. The stock is up close to around 5% in trade. Gland Pharma is under pressure as the stock did see a large trade that took place earlier today. 5.5% equity changed hands. Explains why the stock is down close to around 4%. And Jefferies initiates coverage on two big names, that's Nuvama and 361, with a buy rating and elevated target prices. Both the two stocks do well in today's trading session. And Sula Vineyards climbs close to 3% on the back of a good showing in the Q4 update. The net revenue rises by around 10%. Wine tourism also rises 31% on a year-on-year basis. Bilibili zooms over 2.5% after emerging as a L1 bidder for a Haryana rail infrastructure project worth around 1,000 crore rupees.
Good morning, you're watching us here on Chartbusters. I'm Manglam Malu. With me as always, Nigel D'Souza. It's been a good chart-busting morning. The market opened slightly flattish from there on. It zoomed back once again. The Nifty 22,752, a fresh record high. All the frontline indices had a fresh record high. The Nifty Bank just 1,000 points away, a little over 1,000 points away from that magical 50,000 mark. Nigel, everything looks good so far.
Well, that's right. It's a good-looking screen actually on a Tuesday morning here. And a few stocks that are really doing well. Exide, the stock saw a big run yesterday. On that base, Exide is up close to around 4% odd. So that one should come up for you on the screen. Big up move is what we're seeing on Exide. Hindustan Copper, what can one say about it? Valuations out of whack, but the street is focusing on momentum. And they're looking ahead that copper prices will move up. Copper will be in demand. There's a bit of a deficit that's playing out. Put all that together, well, the street likes it. That stock flying away in today's trading session. And from the mid-cap IT names, Persistent Systems actually has spiked up to the high point of the day. But a couple of names actually from the frontline F&O names are seeing some bit of selling. You have Mahindra & Mahindra Financial Services. Intraday chart tells you the picture. The stock has gone to the low point of the day. And United Breweries, maybe it's a Tuesday factor, so to say. That one as well has moved a little bit lower. Manglam, you're tracking a few more.
Tracking a few more, Nigel. A bunch of them which are doing well. You spoke about Persistent Systems and Exide. Hindustan Copper also came out of F&O ban yesterday, so maybe some bit of traction on account of that. Will be very interesting to see whether it goes back into the ban or not. And then we're seeing some bit of profit taking in a couple of these auto names which are doing well yesterday. So Hero MotoCorp, for instance, is at the low point of trade as well. No problems for names like Axis Bank. There was that large trade that took place this morning, pre-open in the block window. And from there on itself, the stock has rallied about 1.5%. There were some shorts built into the system, maybe covering their positions. Let's see where that goes.
Well, in terms of metals, ferrous, non-ferrous, it's covered widely by the street, most of them. But ferrochrome is not covered so much. And we here at CNBC-TV18 have been highlighting this fact to our viewers that, in fact, keep an eye out on IMFA, that's Indian Ferroalloys Metals Association. Well, that stock has done very, very well. If I'm not mistaken, in the last 2 weeks, that's up close to around 20% approximately. And the intraday chart comes up for you. Keep in mind that earlier there was buying because of that 15 rupee dividend. Yesterday it's gone ex-dividend and still the stock is up close to around 3% because of solid demand and because supply as well is a little bit constrained.
And don't lose sight of the real estate space as well, Nigel. We've been talking about the way these stocks have been moving higher. Not only is Godrej Properties higher because of the update that came by this morning, just take a look at Sobha. Sobha's done well. Brigade Enterprises up around 3.5%. And all of the real estate stocks that you're looking at right now are higher. So the Nifty Realty Index actually will give you a better picture of how that index has been extremely strong. So with all things looking good, what are the ideas for profit? Let's bring our colleagues from Money Control in for our special segment, The Ideas for Profit. Madhu Chandade joins in with a stock that she's been tracking. Madhu.
We are talking about Coforge. After a stellar show in calendar 2023, Coforge has underperformed both the Nifty and the IT index in the past 4 months. However, growth has been strong. After posting over 22% growth in constant currency in fiscal 23, the momentum has sustained. Despite the impact of challenging demand and unusually high seasonal furloughs in the third quarter, the company clocked organic constant currency revenue growth of 14.7% in the first 9 months of the current fiscal. The traction in deal flow has continued thanks to aggressive sales and marketing efforts. Operating margin improved in the last reported quarter, and the company expects sharp uptick in margin in Q4 and is confident of margin gains in FY25 as well. In recent times, the stock of Coforge has reacted negatively to large capital raising plans of over rupees 3,200 crore, which should bring down debt and lower interest cost. Coforge had earlier indicated its intention of reaching $2 billion in revenues in the next 4 to 5 years, wherein approximately 150 million would come from inorganic moves. And the proposed capital raise and mergers and acquisitions ties in well with the long-term goal. Coforge is a long-term growth leader to be added on any weakness.
All right, Madhu, thanks a lot for that. That's about Coforge. Let's talk about popular vehicles. Remember, it's the end of the fourth quarter, but the company's reported their third quarter numbers right now. The reason for that is because they recently did their IPO, and we've been talking about the company and with the management through the IPO and post their listing as well. Naveen Philip joins us once again to discuss their third quarter numbers in detail. Thanks a lot, Naveen, for joining in. First 9 months of this year, 40 to 75 crores. And we're speaking at a time when the first 12 months of this year are done as well. So could you give us a sense of how the fourth quarter panned out for the company and what the outlook for FY25 is on the revenues and margins?
So in terms of quarter to quarter, we have increased. If you look at 9 months, we've gone up by about 20% in terms of revenue terms. And in terms of EBITDA terms, we've gone up by 23% to a total EBITDA of about 216 odd crores in the 9 months listing. And our PAT has gone up by about 12.5% to 56 crores from last year's 45 crores. So we are in line with what we have spoken to the market while we were listing in the IPO, and we continue to hold that viewpoint.
That's the number, or these numbers have panned out in the full year as well, because we are done with the fourth quarter too. So if you have to extrapolate that 20% growth for this year, it would come to closer to 5,800 crores, between 5,800 to 6,000 crores. Would that you end the year with?
Yeah, in terms of revenue terms, we're just collating the figures, but that's what we're looking at in terms of the numbers.
All right, and hi Naveen, good to see you and Nigel on this side. And whatever you deliver in FY24, you'll see a 25% growth on that, right?
Yeah, so if you look at it as we stand today, in terms of EBITDA, we've grown by about 23%, and in terms of overall PAT by about 12.5%. But if you look at Q3 versus Q3, our PAT increase is about 50%, because last year, there was a chip shortage in Q3. So in terms of holding costs, etc., that has been factored into in this year per se. But overall, PAT has been increased in quarter 3 to quarter 3 is about 50%, but overall is about 12.5% for the 9 months.
No, what I'm asking you is for the next year, FY25. It'll be a 25% growth, right? Is what you're looking at.
So if you look at our CAGR for the last 3 years, even if you look at this year vis-a-vis last year, we've been going about 19 to 20% CAGR. So we hope to hold that in the future growth also.
All right, 19 to 20% CAGR is something that the street should be working with. And how has the growth of your services business been in the third? And I mean, when we speak about the numbers now, let's talk about H2. Third quarter is what you've given. Fourth quarter is what's done already. How has services grown in this period? And how is that likely to grow? Because you had said that you're looking at sales of services coming in more than 25% versus 15% what it was.
So services growth has been about 19% by revenue if you look at 9 months ended year on year. The shortfall that happened was from Chennai, basically because we had floods in the third quarter there, which we are recovering from. But otherwise, we are holding the view that we'll still be growing at the rate at which we had mentioned.
All right. And margins, you said, EBITDA for the first 9 months increased by 23%. That's likely to be the case in the full year as well. The next year as well, will your EBITDA grow faster than your revenue? What kind of margins are we looking at?
So we are hoping to grow by that way, but I can't put a figure to it per se. But what we are looking at is in terms of the same CAGR that we have demonstrated in the past 3-4 years to go forward also.
Okay, I want to understand how you're outpacing the market. If you could tell us, what is the industry growing at for used cars as well as for new cars? What is the rough number?
So if you look at industry, all India, if you look at the 9 months that have ended, it's approximately a 10% growth. But in the markets that we were present in, that's Kerala, Chennai, etc., in terms of overall passenger vehicle industry, the growth has been slightly muted. If you look at Maruti, growth has been in the region of about 2% in Kerala and about 18% in Chennai. But the market share has grown by about 5-6% in both these states as such. So that has helped us in terms of our growth also.
Okay. Now, if I look at your, go ahead.
Yeah, sorry. No. So the used car is about delta 2-3% above the new car sales.
Okay, so used car is 2-3% above the new car, and the new car is roughly about 10% is what you're saying, right?
Absolutely, yeah.
Okay, and if I look at your revenue mix right now in the third quarter, 750 crores comes in from passenger vehicles. That grew just about 2%. Luxury has been growing very fast, 100% growth out there. It's about 113 crores. And CVs have grown by 35% at around 465 crores. Yesterday, we spoke to the Federation of Automobile Dealers Association. They believe that luxury will grow, SUVs will grow. CVs, they're not yet very sure because there is the election in the very near future as well. So what kind of growth do you foresee in all three segments in FY25?
So if you look at luxury car growth year on year, last year and the year before last, there was extreme chip shortage, especially for JLR. So if you look at JLR, wholesale volumes across India has also grown by about 16%, if I'm not mistaken. So that growth is translated. Going forward, whether we'll have the stupendous growth that we had this year in terms of luxury vehicles, I'm not too sure, because it was 2 years of COVID, and the back of that was the growth that happened this year. In terms of passenger car, I said whether the industry grows probably will be about 4 to 5% or 6% at the maximum. We were keeping in line with what our growth is, because we have both organic and inorganic growth that will happen. In terms of commercial vehicles, usually in the election year, especially the Lok Sabha elections, the first quarter or the quarter that the election happens is very muted. But post that, there's a growth. Tata Motors has given a view that the growth for this year will be as good as last year in terms of overall growth, especially the construction equipment. In the spaces that we are in, we have both the mix of both small commercial vehicles and construction. So small commercial vehicles has been muted the last 2 years, or in the last 18 months rather. So we are expecting a growth in the small commercial vehicles to a much larger extent.
You briefly mentioned in passing about some inorganic growth. Are you looking at a couple of companies? Should we hear something about it in FY25?
Hopefully, yeah. In Q2 and Q3, we should be able to hopefully announce something.
Interesting. What could... Okay, at least give us some insight then. What could be the size of the transaction? How does it work for you all in terms of a multiple?
No, we're just in dialogue, so it will be too early to comment on the exact numbers, etc. But yeah, hopefully we should be able to do something.
What I'm trying to understand is if you're going to buy it, at least how big will you buy it? What could be the size of the acquisition?
I think this question was asked even during the IPO. They are acquisitions.
No, but this time you're at least telling us that by quarter 3, quarter 4, quarter 2, quarter 3, we could hear something. So our appetite as well has been revved up. Now we want to know more.
So I'm saying every year we have been able to acquire in terms of both. Last year we acquired in Maharashtra, and that has led to the growth of about 25-30%. So we are hoping that in terms of acquisitions, it would be in those sizes.
Okay, so you during the IPO had said you typically do 1 to 2 dealership acquisitions every year. FY24 you did not. I presume that it's also because you all were busy with the IPO and consolidating the previous year's acquisitions, etc. FY25 in the second half we could see some acquisitions. What I want to understand is that will this be in the same geographies that you operate, or will this be in the other geographies as well? And will the size be similar to what you've done in the past?
I like the leading question, but yeah, we would look at expanding our geography, our footprint also. So both in geographies that we are present in and in new geographies.
All right. You like the leading questions, but we like clearer answers out here. But be that as it may, we'll speak about it when that happens. Final question then. Your revenue mix itself, 80% is still concentrated towards the south. Do you plan on this moving outside of south as well? What's the target for FY25 here?
Yes, so we've always been trying to reduce our revenue mix in terms of state concentration, and that going forward we'll keep at that. So even Maharashtra has contributed a large part of the revenue this time also, and Maharashtra revenue has grown up by about 50-60%.
Okay, always good speaking to you, sir. Thanks a lot for stopping by and giving us some more details. We'll chat with you once you announce the next quarter's numbers as well. Stock, perking up a little bit based on that guidance that the management just gave us. Well, for the time being though, let's slip into a short break. On the other side, we'll be joined by Shilpa Raut of Prabhudas Lilladher. She'll help us out with some trading strategies. You don't want to miss this. Welcome back. Well, the markets are doing well. We're moving towards a century mark. It's like a batsman in fine form with its eyes set on 23,000 odd. I'd mentioned this earlier today as well. This market wants to move up, and those are the indications that are coming in. There are a few stocks that have taken off the train. IRCTC stock moves to the high point of the day. Bata, we have been covering. Mangalam has been telling us it's been actually a relative underperformer. That stock spikes up as we speak. So some bit of a bounce on that name as well. But Shilpa Raut is with us. Hi Shilpa, good morning. Good to see you in as always. Well, first of all, Happy New Year. Happy Gudi Padwa to you as well as to your entire family as well as your team. Tell us, how do you trade the markets? The Nifty bank is showing signs that it wants to come back and wants to come back in style. It's up close to 300 points. Levels on the Nifty and the Nifty bank?
Good morning, Nigel and Mangalam, and a very happy new year to both of you. Talking about indexes, yes, it is a green day, and as we have been talking about that 22,800 will come, then eventually we'll also move towards 23,000 to 23,200. So that is how it is playing out for Nifty. So now your trailing stop loss has to be 22,500 from here and stay intact. Maybe safe traders can book one round of profit booking at around 22,800. But if we sustain that, then 22,000 is definitely on the cards very soon. Talking about Bank Nifty, we see the breakout happening there, where we will see the indices, testing around 49,500 to 50,000, definitely this series. So this just about time that, we will see that mark happening, but then 49,000 might act as a psychological barrier, for a couple of days. So again, safe traders can book one round around 49,000 and wait for that up move above 49,000 to, again, take a long position towards 50,000 mark.
All right, so that's about the indices. 50,000 on the Nifty bank only once it crosses the near-term hurdle of 49,000. Shilpa, once again, wishing you a very happy new year, happy Gudi Padwa. Nigel, on Gudi Padwa, the tiffin services in Maharashtra, Mumbai are disrupted. Maybe it is an indication of you buying us some pizzas, because Devyani International, that's the one which is up around 4.5%. Up at the high point of trade, doing extremely well. The intraday chart of Devyani International comes up for you. They obviously deliver Pizza Hut, KFC, all of that. Would that be on your list, Nigel?
I bought 2 mangoes for lunch today because the service is not working. But if you say pizza, let's go with pizza.
Okay, let's go for
pizza. I think mango amras is a specialty actually. I think
let's do amras and pizza. Why not? Shilpa will probably give us, what do you call it? An inkling into what sweets are expected from Gudi Padwa this time around. Tell us the stocks as well.
It's a sweets, definitely you can have the still laddus and all. That is something I love to have, and I can always, welcome you both for that treat. And if you guys are ordering in pizza, then you can always count me in as well, if that is okay. So talking about stocks, I have two buys here. One would be in LIC Housing Finance. It is trading at around 660. I believe the stock is all set to go towards 700 mark with a stop loss of 640. So a very favorable risk reward. You can have that in your radar. The other one would be in Aarti Industries. Aarti Industries, also the entire chemical basket is doing very good, and from here 700 and above the stock is sustaining. So with a stop loss of 690, stay intact for the targets of 735 to 760.
All right, Shilpa, thank you so much for that. If pizzas are in, we will most definitely invite you. And for the stock ideas that you've given as well, we'll keep speaking to you through the week and thereafter as well. Thank you for joining in. Nigel, he spoke something about Til Laddu. I remember you have this very good saying which is said during Sakrant. What is it in Marathi?
Til Gol Gyani Gol Gol Bola.
Til Gol Gyani Gol Gol Bola. That's for January.
But Gol Gol Bola should be throughout the year.
Throughout the year.
Not only on any particular day. Be nice, love each other,
And keep eating Til Gul also throughout the year. Why just, Sankranti? But be that as it may, that was some fun and also some market technicals. We'll take a short break, come back, get you more on a lot of the other happenings in the market. But as we do that, let's share an important announcement with all of you all. We're launching CNBC TV18's first ever live personal finance webinar, CNBC TV18 Accelerate. It's the personal finance handbook with Sonia Shenoy. She'll be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know for mastering your finances, learning how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. Lots to learn and lots to do. Whether you're in your 20s, 30s, or even 40s, this live webinar is for you. There are limited seats, so don't miss this chance. Register now, scan the QR code on your screen. Register or log on to CNBC-TV18.com. We'll see you on the 11th of May.
Welcome back. Well, the real estate pack is doing well. India Bulls real estate is higher. Ajmera Realty as well. The street liked those numbers. DB Realty as well. So some of these stocks actually they got clonked back in the second week of March when we did see a lot of selling, but they're still holding with gains. In fact, Ajmera has come off considerably from the high point of the day. It was up close to 9%. Now it's come off. But let's focus on a couple of select stocks. Then wealth management companies, Nuvama and 361. They're surging on the back of a Jefferies note. The brokerage has initiated coverage on the stock with a buy rating. Vamakshi joins us to run us through that note. Vamakshi, take it away.
Well, absolutely. Jefferies has highlighted that Indian wealth managers are very well poised to rise the economic growth cycle in India as well as the financialization of savings. They've highlighted that large wealth managers could deliver as much as 22 to 25% CAGR over the next 3 years, that is from FY24 to FY27. And this will largely be driven by net inflows of almost 12 to 17% from higher wallet share, expansion in newer geographies as well as MTM gains. Apart from that, the industry has shifted to full trail mode and as a result it has shifted away from upfront commissions, which in fact provides long-term revenue visibility. In fact, the share of annual recurring revenue has risen to 60 to 65% as compared to 40 to 50% in FY20, especially in the UHNI segment, and this is further expected to rise to 70 to 75% by FY27, which provides good predictability as far as the revenues are concerned. Operational efficiency will compensate for fee compression, and in fact leading players are expected to deliver profit CAGR of anywhere between 20 to 22% over the next 3 years. Therefore, what Jefferies sums up is that the rise in share of trail fees is improving the earnings visibility for these counters, and that in turn is supporting the valuation re-rating. So given all of those factors, they've gone ahead and initiated coverage on 361 with a target price of 900 and on Nuvama with a target price of almost 6,000 rupees per share with a buy rating on both of these counters.
All right, Vamakshi, hang in there. That was Jefferies initiating coverage on wealth management. We're wondering if you would like to initiate coverage on our health management by, buying us some lunch today. It is Gudi Padwa. The Dabbawalas are on leave. So maybe you would want to initiate coverage on, making some orders for lunch.
Absolutely. Maybe we'll think about it.
Think about it. That's a hold rating. It's not a buy rating yet, Nigel.
Yeah, just be careful, Mangalam. Vamakshi may suspend coverage on both of us for the time being, the way we are pushing for lunch. But thanks a lot. Thanks a lot, Vamakshi, for joining in and giving us that. But maybe someone who's actually wanting to tell us some more about the lunch that we are going to be getting is Vivek. Vivek, you're on our radar. But we'll talk about the lunch a little later. For the time being, tell us all the stocks that are buzzing a trade.
Good morning, and we look at it during Pongal. But some of the stocks are on the radar on the back of block deals, news flow coming in there. So Gland Pharma is the stock that we are looking at. So Gland Pharma, we had told you earlier that we had accessed the term sheet for the block deal, and as expected, almost 5% of the total equity changed hands over there via large block deal. So Nicomac Machinery, which was one of the holders of the stock, and RP Advisory Services, the other holder, both of these stocks have completely trimmed their stake, as per the term sheet. And when you're talking about the kind of terms that were there for this particular block deal, the floor price was at 1,725 rupees a share, significant discount to the current market price. Stock has recovered a little bit from the day's low, but still down quite significantly. Remember, Nicomac Machinery held almost 1.19% stake, and RP Advisory Services held close to 3.74% stake. The next stock on the radar, Dilip Bilkon. Some positive news flow coming in. The company emerged as the lowest bidder for tender as far as the Haryana Rail Infrastructure Development Corporation is concerned. Now, this particular project is a building of an EPC mode as far as the state of Haryana is concerned. Order value of over 1,090 crore. Project will be executed over the next 36 months. And lastly, Surya Vineyards, when you're talking about the operational update over there, Q4 net revenue up 10% on a year-on-year basis, coming in close to 132 crore rupees. The Q4 own brands business sales up 9% at 113 crore. Wine tourism up quite significantly, almost 31% higher at 16.5 crore rupees.
All right, so that's about Surya Vineyards. Vivek, we're just asking for lunch, not any of the wine, etc. You're talking about Pongal. Maybe whip out your credit card right now and buy us in advance of Pongal itself. SBI cards, that's the one that's moved to the high point of trade. Maybe something the street is sussing about Vivek buying us a big lunch, Vivek.
Well, I don't think so. I don't believe in the credit card currently.
Okay, so we will, do it on UPI or any of the Zomatos actually. Pull up the intraday chart of Zomato
and just to clear the air, Mangalam, you spoke for yourself and you said you're not interested in the wine.
I'm not interested in wine. Okay, that's for me. Nigel, well, the wine tourism, I wouldn't mind that.
Interesting one out there. Well, before we wind up, let's do a quick check on the markets. Well, we have managed to, keep the markets higher, so to call it. At the start of the show, we were up by close to around 80 points. The Nifty is still up close to around 80 points. The Nifty Bank is up close to around 300 points, and that's looking quite good. And as we speak, the number of stocks advancing are more than the number of stocks as declining. So the market's in perfect good shape. We'll wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.